Hello and welcome along to Applied Education Salary Packaging DVD. My name is Brett Thornett, your presenter. Let's start by having a look at the chapters of the DVD. Chapter 1 is the introductory chapter, which examines how packaging benefits the employer and how it benefits the employee. From there, we have a look at the taxation aspects of packaging. So we'll start off having a look at how the cash component is taxed under the Income Tax Assessment Act, and then how the non-cash component is taxed, and that's normally taxed under the Fringe Benefits Tax Assessment Act. We'll then have a look at concessional organisations, so public benevolent institutions. We'll have a look at rebatable organisations, and we'll also have a look at public and not-for-profit hospitals. So if you are in these sectors, it's certainly worthwhile examining what the concessions are and also how it can benefit both you and your employees. Next, we'll have a look at cars. So with cars, we look at how they're taxed. Then we'll look at how to calculate the amount to salary sacrifice. We'll then have a look at how it gets run through the package. But we also have a look at ownership options, whether it be a novated lease, an associated lease, or a company-owned vehicle. Chapter 5 is other benefits, so it's worth going through that or flicking through the manual with that one to see if there's any benefits that may benefit your staff. It might be they're provided with free or discounted property, free or discounted services, it might be housing, and there's a raft of other benefits in there. Chapter 6 deals with the remote area concessions, both in terms of housing, travel and so forth, and also relocation. And the final thing that we need to have a look at is just how receiving these types of benefits can affect their overall tax position through the reportable fringe benefits box on your payment summary and also reportable employer superannuation contributions. Let's start by having a look at an introduction into the packaging environment. Salary packaging just means that instead of your employee receiving cash, they can elect to receive part of their salary as a non-cash benefit, such as superannuation, cars, notebook computers, and so forth. It can also be referred to as salary sacrifice or flexible remuneration. These terms are used interchangeably. But the key out of everything on this DVD is the point on the bottom, that any non-cash benefit is paid for off gross income. So there's a reduction in gross income and they're getting a pay rise as a result of the reduction in PAYG. The model that we use for our packaging in this DVD is called the Total Employment Costing Model. This model uses the total package as your limit. So let's say you're on a package of 120,000. What you then look at is what comprises that 120 in terms of the cash component and the non-cash component and the super, so it adds up to the 120. The old way of doing it is gross salary plus benefits. So you're on 100,000 plus you get a fully maintained vehicle. But the reason that I'm using total employment costing is that is the industry standard. Top 500s all use it, government employers all use it, and most of your packaging software programs also use total employment costing. Which begs the question, what's included in your total employment cost? It includes all of your cash payments, obviously, but also superannuation, and with superannuation that's both salary sacrifice and super guarantee. Also the cost of any benefits provided, less the GST, and to that we add on any fringe benefits tax. And that amount, by the way, does exclude any on costs, so your payroll tax, your work cover, and so forth. Let's have a look at an example. Here we're starting with a cash salary of 110,000, and to that we're adding on the super guarantee. Once we've worked out the total employment cost, we can then have a look at salary sacrifice arrangements. So to my gross salary of 110,000, I add my superannuation 9%, so 9,900. So my starting point for my total employment cost is $119,900. From here, we're able to change the mix between the cash component and the non-cash component. So Samantha now can take any mix of cash, super, cars, notebooks and income